And all right, some great news today. Yes, we saw interest rates come down. We saw a buyback in the 10-year Treasury, and it drove those interest rates down today. Almost a whole point in a movement in the 10-year Treasury. But the big question I have is it going to last? What's going on, y'all? My name is Kevin Weedmark, aka The Mortgage Mouth, coming to you with a daily dose, a very quick 2 minutes of what happened today. And again, with no significant data other than the 10-year Treasury, which actually did well. I thought there was some fear possibly going into that, and I think that was a little bit of a movement. The appetite for U.S. debt is still there, even with the big, beautiful bill being signed, even with all the tariff rhetoric. There is still an appetite for U.S. debt, and that is a good thing. And I think that had some significance in today's movement. The other thing that I think that we also are seeing is possibly just a buying opportunity. Traders are looking at it and saying, hey, I think maybe 4.4 should not be the floor. As I indicated yesterday, I think they were kind of trying to establish that as the new floor, and that's not the case, obviously. It looks like they may believe that 4.3%, somewhere in between 4.3 and 4.35 is where the 10-year Treasury should be hanging out until more data comes to us. Tomorrow we got that 30-year auction. We'll see how that plays out. And then obviously, hey, it's all eyes on next week. All eyes are on that CPI number. Should inflation go higher, we are going to see growing concern for inflation, meaning the Fed is not going to be reducing the Fed funds rate anytime in the near future. But again, it's all going to depend on the data, y'all. But a good significant movement today, a good opportunity to potentially lock those loans. All right, y'all, I'll be coming to you tomorrow with another episode of The Daily Dose. Hit that subscribe button. Cheers.